Hi, this is Richard Roop with richardroop.com, and this is the Secrets of Free and Clear Deal Investing. And this is session number 6 on our series of frequently asked questions. And on the line I have with me Coach Courtney. How you doing, Courtney?
I'm wonderful. I'm excited to hear this, and I feel like we've done more than 6 of these.
Maybe. Well, this is right now we're doing a weekly series, so yeah, we've been doing it for a while. We've been hammering out some very commonly asked questions, so I encourage people to take advantage of the library of webinars that we did previous to this, where we answered other questions. The question that we're going to cover today is a very common question, which is, hey, Richard, all sellers I talk to want cash. Why would they do this? Okay, now on the last session, I believe we did talk about a number of reasons why sellers would take back a note, right, Courtney?
Yeah, we did. We covered some real good reasons.
Okay, but what I want to do is I want to lay out some ideas and some strategies behind and some thinking, kind of a mental mindset is, for example, all sellers expect cash. That's what they expect. And one of the mistakes you would make is a seller wanting all cash and being surprised. So,
right. Yeah.
So you can expect that. So we're going to talk about that. Then at the end, we'll talk about, reviewing the other sessions and joining us for future sessions. But this week we're going to cover, the fact that all sellers typically want cash. Why would they take back a note? So, yes, all sellers just want cash. Well, before they know their other options, okay? If you think about it, we are contacting sellers of free and clear properties. We're using this advanced deal structuring strategy to offer a seller more than market value for a house based on how long they would consider doing some financing. Of course, as investors, we're going to buy a house real cheap, all cash. That's what we need to do to make money. Mm-hmm. But if we can figure out the money we're going to get when we get it occupied and the money that we're going to get each month and the money that we'll get later, if we add up all of those potential profit centers, cash now, cash flow, and cash later, and that adds up to, let's say, $150,000, and we're happy to make $75,000, then we can pay the difference in a premium price when we crunch all of our income, all of our expenses, all of our costs, and that's exactly what we do with the ultimate profit generator. So the sellers, if you think about it, sellers, when they go sell a house, they're just expecting a buyer to go out and get a bank loan, cash them out, and then they're going to, have some idea of what they're going to maybe do with that cash.
Right.
So they expect all cash. They want all cash because that's what they expect. But that's only true before they know their other options. And their other options is, hey, we'll give you some cash now and some cash later and some cash flow, and you get these advantages. You get to avoid a real estate agent. You get to avoid paying commissions. You get to avoid negotiating to a discounted price. In fact, we'll give you a premium price. And here's what we can do, and here are the benefits, and would that be good for your situation? So it's kind of like night and day, Courtney, when you talk to a seller. And sometimes when you first present the idea of them taking back a note, their initial, knee-jerk reaction is, no, I don't want to do that. I don't know you, I just
right.
want all my money.
Right.
So you never really want to ask them to take back a note unless they're looking at the numbers and until after they understand all the benefits that they would get if you bought the house. So all sellers expect cash, but all sellers do not need their cash, all right? Some sellers, in fact, would like some income. We just got a deal accepted, was it yesterday or Monday? And the client, I call him a client, the seller, was delighted to get long-term 20 years of cash. Actually, we offered 20 years. He settled on 10 years of reliable monthly income without having to deal with the property ever again. And he loved that. And so that's what you're looking for. Now, other sellers, when they weigh their options, they say, you know what, I like the idea of getting income. I never even thought about that. In fact, a lot of sellers tell me that. I never thought about selling it with seller financing or getting income, but that sounds pretty good.
Well, yeah, most of them don't have any clue that it even exists. I mean, they're taught in this society of that's the normal means. You put your house on the market, somebody goes and gets a loan, you get money, and you move out. I mean, that's all they know. That's the norm for them.
Right. And, I'm not using it in my presentations now, but how do the banks make their money? They make their money on loans,
Right.
And so you get to be the bank.
That's what I say to sellers. I I explain it in terms that they understand, and I say, so it's sort of like you being the bank,
And the property becomes your collateral, just like a bank.
Right.
And, we would have to take care of you and keep our promises, or we wouldn't be able to keep the property. You could get the property back. Of course, you don't want the property back, but that's, that is your collateral. And I tell them that, we're using a long-term buy and hold approach. We're willing to wait. We can make our money on the back end down the road. And so we have to take care of you in order to protect our profit. So some sellers would like the income, but only if you offered it to them. So a lot of we'll talk about some of the common mistakes that investors make, but they assume the sellers don't want to take back a note. They assume they need all their cash, and they assume that they're going to say no. And
right.
So in some cases, they don't even make the offer.
And they just need to be educated and see the benefits.
And that's what this is. A seller presentation is actually an education process. And normally the deals that we get closed, we talk to the seller 2 or 3 times, right? And it's all about making them feel comfortable, making them understand it, answering their questions, and educating them. And we're going to talk about that today as well, educating them, because we are the professionals and they're just selling a house, okay?
Right.
And we know a lot more than them. And you would think people know what they're actually netting if they rent out a house. You think people know what they actually are netting if they sell a house through an agent, but they're clueless. And actually sometimes they're misguided. And so we just want to point out the facts, educate them, get their agreement. Oh yeah, okay, I'm actually netting less than I thought I was. I'm renting it out for $1,500. I thought I'm getting $1,500. Oh yeah, taxes. Oh yeah, insurance. Oh yeah, I did have a month of vacancy last year. Oh yeah, I did have to replace the carpet when they moved out. All right. So some sellers want a high price more than cash. That's why we want to present our high prices before we even talk about seller financing. And that's when we kind of let the cat out of the bag. Here's the price I can give you if you can consider doing some seller financing. Some want a quicker and easier sale than going through the traditional process, and of course that's what we offer. That's one of the things we offer, but that is attractive to people who don't want to deal with getting the house ready, fixing it up, putting it on the market, and dealing with buyers who may or may not close, and the uncertainty of it all. So that peace of mind is real important. Now, most sellers expect cash, but most do not, and most do not expect a terms offer. All right, and so why would they do this? Well, like we said in the last session, they love our prices. Okay, that's one of the reasons. That's one of the motivators. Is especially these people in these post-hot markets where they paid $300 and we're offering to buy it for $200 because it's worth $150.
Right.
Or it's like we can actually give them the $300 that they paid for it, even though it's gone down 50%. We can give them the $300 if they do a 20-year note.
Right.
So some people have this emotional connection to the price because of what they got into the property or whatever reason. They're stuck on price. So we can overcome that. We can give them a great price. They want to avoid real estate agents. That means, again, showing the property, and some people have had bad experiences with agents or trying to sell a property. We buy a lot of properties from people who have already tried to list it, and they weren't happy with their agent, and they're just fed up, and they just want the house sold. And guess what? We can close in a couple weeks. They do not need all of their cash. So this is a numbers game. We have to sift and sort through people who think they need all their cash. They want all their cash. But we got to educate them on the benefits of, if you really don't need it, here's an option for you. And if you did get the cash, what are you going to do with it? Where's a good, safe place to put your money these days?
Right.
Most people, now we do talk to people that are planning on buying another house or paying off some debts or something like that. A lot of people just don't know what they're going to do with the money. They just want it sitting in the bank. And as opposed to it sitting in the bank and getting, 0.5% or 1% interest or something like that, we can show them that we can pay them this huge premium price between what they might net selling it traditionally and what we can offer with them paying a note. That can be a nice big number, this big premium that they're getting, which is a kind of a nice investment for waiting, kind of a nice return for waiting for their money if they're in a position to do that.
Right.
But some people are in a position to consider it. Others, nope, it's just not going to work. And then we know it's a numbers game. We might have to talk to 10 or 12, or maybe even if you're getting started, 15 people to get a deal. And so you just want to work through the numbers. But one of the common mistakes that I see investors make is they make a couple offers. They make 3 offers and none of them are accepted, and they decide it doesn't work.
Right. I think the whole thing doesn't work. They just haven't gone through enough numbers.
That's right. And we've had people get their first offer accepted. Okay.
Yes.
And so it's, you never know, but you just know that it is a numbers game. You'll have to make a number of offers to capture $75,000 or $100,000 on a deal. Let's see, sellers, why would they do this? They do not know what they would do with the cash, and they want to pass on more to their heirs. So we talk to a lot of seniors, and they really don't need the money. They're financially independent. They don't even know what they would do with the money. In fact, they're going to be passing it on to their family or friends or whatever. And this is an opportunity for them to actually pass on more money to their estate, okay, by taking a higher price. In fact, I got one deal accepted, Courtney. The guy didn't need the cash. He didn't need the monthly income. He just wanted to get rid of the house. It was been vacant for like 9 months. He bought it for his son-in-law to take care of his grandkid. He got the house back. It was all destroyed. It needed a lot of work. I bought that thing with no money down. I paid him like $220, and I gave him a $220,000 note, $300 a month for 20 years. No and he was happy with that.
You met his need.
I met his need. And that's, obviously $300 a month. I think I borrowed, $70,000 out of the house when I bought it. Some rehab money, but probably an extra 30 or 40 grand in my pocket when I bought it. And the house more than, covers my private money first and his $300 second. And then, of course, I'm rapidly, every month I'm knocking down his note, $300. Now, sellers expect cash offers, and that's normal.